Welcome. My name is Ralph Bivins with the Ralph Bivins Project, and we're here today with Cathy Treviño, the incoming chair of the Houston Association of Realtors, one of the largest association of realtors in the world, I guess. And so, welcome, Cathy. She's also, with a real estate firm called Side, and she's the head broker there, managing broker there, and everything. And but she's incoming chair, new in her job as a volunteer for the Houston Association of Realtors. And so she's, and one interesting fact, this kind of got me worried when I was looking at your bio. She's also a black belt in Taekwondo. So I'm going to be careful. I want to be careful. I don't want to ask too nasty of a question, or Taekwondo. I'm a little nervous about that. A little nervous.
Nothing to worry about. Thank you so much, Ralph, for having me. I really appreciate it. Very excited to be here, and hope I can give some insight to all of your viewers.
Well, Cathy, we're at the very start of a new year. 2023 is here, and just how do you feel about the realty market in this region as New Year approaches? Or it has approached,
Right, it's here. We're definitely have dived into 2023. It started, and so, I think right now we're still seeing a continuation of what we seen the last quarter of last year. And so there was a little bit of slowdown in the market. We had a lot of things facing our industry, and still have, that are taking a big impact into the real estate market, which is inflation is one, and a lot of consumers are experiencing that, and especially after the holidays, they are really feeling the pinch right now. And so typically January is a slower month for real estate because of that, not necessarily of the inflation in itself, but just because of the fact that it's after the holiday season. People have already spent way too much, and if they haven't purchased a home already, they're kind of putting a little pause on maybe filing for their income tax and then utilizing those funds to purchase something else. And so those, it's our industry is very cyclical. And so January is typically one of those months, but not to say that those other things aren't impacting our industry. So interest rates have also taken a big impact into what we're seeing, and a little bit of slowdown into the market, as well as, it's putting a pinch on the buyers' purchasing power, because interest rates have risen. We've seen higher interest rates than we have seen in years. Consumers were very comfortable with those low interest rates. A
year ago, it was about 3%, and now it's almost 7%. That's
exactly
a big jump in 1 year.
It doubles, and so it's doubling their payments, and it's putting a pinch on their wallets. And so those buyers, who don't necessarily have to move, are kind of watching the market to see what it will do, because economists are saying that interest rates will start taking a little, lower, will lower, but I don't think that we're going to see them back into the 3s again. I think we're probably going to end up staying right around 6%. Is where they're predicting. I've watched a couple of economists already this year, and just trying to get an idea of what others are saying, not only in the Houston area, but in the nation. And so I think that, because that always carries over. I mean, of course, Houston, real estate is local. And so we always want to make sure that we're looking at our local statistics and all, but we also want to make sure that we're looking at nationally to see how it's impacting, because that's what people, look at. So we are thinking that they will hover around 6%.
That's people that bought a home back in the 80s, they were dealing with twice that. 11%, 12% looked good at some point back in time. And There are other
Yeah.
people with those adjustable rate mortgages, and they said, well, in retrospect, I'm glad I did because it had finally adjusted down. But the rates being this high is just I've heard every time it goes up like an eighth of a point or something like that, you've knocked another million people out in
Yeah.
America that can't afford to buy a house anymore. That's kind of scary.
Yeah, and that's what we're seeing. And so therefore, because of that, we've actually seen the rental market increase. So for buyers who have put a pause on it or have really looked at saying, well, I just can't afford to purchase a home right now, maybe I'll just rent. And so the rental market has really increased.
Mm-hmm.
Rentals of homes as well, as far as prices, have actually increased a bit as well. But buyers are saying, well, if I'm putting a pause on, my shopping and actually purchasing a home right now, it may be, a great time to rent and see what the market does. And I think a lot of buyers are actually looking at that. So, those are some of the things that we as association are looking at, and making sure that we get the information out to our members, and so that they're aware. And I think that's going to be a big part of what we do as an association, is keeping our members and the consumer all aware of what's happening in the market.
Yeah. Well, when they go to the grocery store, they certainly know the prices are up, inflation's up, and then if you watch the news, you hear about, the Federal Reserve is trying to kill inflation by knocking up interest rates, and that's, after a while you get kind of tired of hearing that. It's like,
right.
The Federal Reserve, that's enough, man. Why don't we just pause for a second, see where all these rate cuts or rate increases, how they impact the home market.
Yeah.
And they're out ahead. They're waiting. Let's raise it some more. Let's raise it some more.
The good thing
I wonder if they're going overboard. I wonder.
Yeah, I mean, of course, negative news sells, and so that's what they're putting it out there. But what I would say is, it is a good time to buy. I mean, right now, buyers have a lot of opportunity. The market was so hot for the last couple of years that it actually it put a lot of buyers out of the buying pool, because we had a lot of buyers that were coming in from other states that sold their homes and had a lot of equity and were coming to Texas because Texas is affordable, and especially Houston. We have so much to offer with this amazing city here. And a lot of people were coming and moving to Houston. We're very fortunate that Houston is a affordable city to live in with lots to offer. And people from all over were finding that out and coming to Houston and Austin and, all of these great cities that we have in Texas, and bringing the equity that they had and purchasing properties with cash. And so a lot of buyers.
California, they've got a ton of it.
We had a lot of
homes worth $1 million out there. 3-bedroom, 2-bath. Oh, that's $1 million.
Yeah. And so they looked at what they can purchase here in Texas, and they're like, wow, I can pretty much purchase, a mansion almost with what I have, with the equity. And so they brought their money here, and that's where we started seeing the prices of homes actually to increase. And we had multiple offers. We had, people coming in and purchasing properties above asking price. And so it really put a pinch on the buyers who were locals here and just, wanting first-time home buyers who just need a home, want to buy a home to live, to start a new family. My son was in that situation a couple of years ago when the market really just started coming up. He was about to get married, want to buy a home. And, he was up against that. And he was like, Mom, what do I do? I don't have $100,000 or $50,000 to go above asking price. And that's what my competition is. He's like, I got $8,000. What can I do? And so we had to be creative and find the right home. And eventually we were able to find him a home, and he's very happy in it now. But those are the type of things that we as realtors need to make sure that we know the programs that are out there. There's lots of programs available for first-time home buyers, for teachers, firefighters, a lot of programs. So the main thing is getting yourself educated with what's available for you as a home buyer, to see if you can qualify for these type of programs. Educate yourself as much as possible. Get yourself a really good professional realtor that's local in your area, who knows the products and tools and the programs that are available out there, so that they can help you get into your home. And you know, there's a lot of good properties on the market right now. One of the things that we're seeing is inventory is on the rise. And so that's also something that's a positive for home buyers, because before we had such low inventory and a lot of buyers coming in, you had a lot of competition. So right now the competition is not as steep, and you can find some really good opportunities. We're also starting to see homes sales decrease just a little bit, not much, but you know, because homes are sitting on the market just a little bit longer, we have sellers who need to sell and have, you know, decided, hey, well then, you know, I'm okay with selling at asking price and not, having.
Let's back up for half a second. You know, you said just a little bit of a decrease. Those November numbers that came out from HAR, Houston Association of Realtors, comparing November sales versus November sales of 2021, it was a 30% decrease. That was the biggest decrease I'd seen in a month versus month situation in quite some. That's a big decrease.
It's a big decrease, and buyers are looking at that, and so they're saying, "Whoa, I want to take a part of that. You know, I want to be, now may be a great time for me to purchase, because you don't know what the market's going to do 6 months from now." I mean, we look at the market this same time last year, and we were still such a hot market. And then 6 months later, you know, things shifted. So it can happen that quickly.
Oh, amazingly quick.
Yeah.
And what about the circumstance you were talking about buyers having to pay over asking price to get the home they wanted? A bidding war arises, and we were hearing about sometimes, especially in Austin, but also in Houston and everywhere, but some buyers would pay $100,000 or more above what the original list price of the home was. Has that tapered off? And now it's tapered off. Has it disappeared?
It hasn't disappeared, but we're not seeing prices of asking as high, like the 100,000 and those. I mean, in some areas, like I mentioned earlier, real estate is local. And if a property is a hot property, a great property, and in a great area, and it has everything the check marked off, then, you know, you are still seeing, you know, some multiple offers and, you know, asking price a little bit above. But for the most part, we're seeing most offers are coming in at asking price. So if a seller is asking for a certain price point, is at a certain price, then that's basically what they're getting. So we're moving into more of a normal market, and the market is stabilizing to where we're seeing offers come in closer to what they were back in 2019. 2018. So that's not a bad thing. You know, I think this is a great time for buyers to be able to take advantage of that.
Well, the inventory going up, it had been exceptionally tight, right. So tight, but there's a little bit more properties for sale now than there had been.
Yes, we're sitting at 2.9 months of inventory, which is the most inventory that we've seen in, gosh, 8 or 9 months, which is great. We're also seeing more inventory when it comes to the new home sales. Builders are, you know, there's more inventory on the ground for builders. New home sales, you know, our builders are now starting to offer incentives. So that's another opportunity for buyers if they're looking for more of a new home product. And so, you know, these are all advantages that buyers can take advantage of. Right.
I remember, you know, builders having waiting lists and long waiting, and some builders would say, "Hey, our waiting list is full. We're not even going to take any more offers now." And they were also dealing with huge increases in building materials. So they said, "Okay, we'll build you a house for this," and then windows and lumber and everything else was gone up. By the time they're ready to deliver the house, building materials have gone up 30 or 40%. Big deal. So to some, they just said, we're not, hey, we'll come back in 6 months and we'll talk about it. And that's talk about switching fast. That really switched fast. From now, they're, builder sentiment is super low, and I think it's a lot more normal than it had been.
Oh, yes.
It was not too bad, but yeah.
No, it's actually, I think it's a good thing. I think it's something that will put our market back into a situation to where it's not such a hyper market, and it's more of a fair market, more stable market. And so, I don't see that we're going to take a deep nosedive or anything to where prices are going to drop dramatically or anything like that. I do think that, we're going to see more of a normalization or, and a stable market coming our way for 2023.
A stable market. Okay. Well, stable market sounds good. And as long as the things keep churning. But the National Association of Realtors chief economist Lawrence June said he thinks that interest rates will taper back down a little bit, and others have said that too. That, and I'm sure that can't come soon enough for some people that are waiting.
Of course. I mean, we all want to see those interest rates dip down as far as they can go, but I think we got to be realistic. And I do think that, like I mentioned earlier, I think that they're going to stay hovering right around the 6%. And, a lot of it right now is educating the consumer, and the more the market, and we've been, here now for several months now with these interest rates, and as they continue to fall, then more consumers will get back on. We also want, as our market continues to move, and the months of inventory will continue to grow, I do believe, because more sellers will decide to put their home on the market, usually in the spring and in the summertime. And so a lot of times this is a time where our industry starts picking up and ramping up. The busiest time of the year for realtors is summertime, between May and August. I mean, you're usually just super busy.
Right. And the thing that I would say that might tamp down on inventory build increases would be, people that have the 2.5% mortgage, and they're going, wow, do I really want to let go of this mortgage and buy a house? And look, and pay 7% or 6.5% or 6%. That's such a huge increase, and I'd end up with a house that's probably about like what I've got right now, or it's just that whole disincentive of these. If you're holding on to a great rate, that's something you want to hold on to sometimes.
And that's what we're seeing. Home sellers, are staying in their homes longer, and that's going to be part of it. Something that we're going to have to, take in effect is that sellers are going to want to stay in their home longer because they have such low interest rates, or if they got a really good interest rate, they don't want to, lose that. So I think that's going to be one of the things that will impact, we'll see an impact later on.
And you spoke about rentals earlier, people deciding to rent houses. What about sellers? Are they looking at that as an option also right now? They say, I don't, if I rent this house for a couple of years and then come back when the prices have gone up better, or there's more, whatever, is that an option that the sellers are looking at right now?
Yes. I mean, we are seeing that. And I think that's why we have more rentals on the market, because sellers are looking at, and that's an option for them. Let me go ahead and hold on to this property if they have to make a relocation to maybe another city or another state. So instead of selling their home or putting their home on the market, they're holding on to it, putting a renter in it, and then renting somewhere in their new destination to see, when they come back, if, what the market is at that time.
You were also at one time, looking at your bio, involved with the Texas Association of Realtors in terms of being an organizational leader, kind of in the northeast part of town, Kingwood and Lake
Yes.
Houston. Like, you obviously know a lot about that area, and there's a lot of home building out there. And there's a lot of stuff happening all of, Kingwood's been a mainstay for quite some time. What's just your take on the northeast quadrant of Houston?
Well, we have definitely seen a lot of growth out here in our areas, because of the pandemic. A lot of people have actually started working from home and did not necessarily have to commute, into the city. And so we started seeing a lot of growth in the suburbs. And, though Kingwood's not, necessarily considered suburbs, we have, it is more out on the outskirt of Houston. We also have areas like Crosby and Highlands and Huffman, Dayton, all of those areas on the northeast part of Houston, just continuing to just boom. Conroe, all of those areas in the northeast. And I think it's because consumers are really starting to see that, hey, I don't have to drive in. So they're wanting more land. They wanted to get away, not have to feel like they're on top of their neighbor, have bigger yards, better schools, whatever it may be. So those are the type of things that have drove consumers more out into the suburbs. And we definitely have seen it out here in the northeast part of Houston.
And there's also a phenomenon with the so-called build to rent things where home builders come in and build like DR
communities. Yeah.
They build a community of several hundred houses. And somebody wants to buy them. I'm sorry, these are rentals. And there's demand. I think it kind of plays off what you're talking about. The people that want to have the yard and the amenities and the school or whatever that you could find in some of these great suburban neighborhoods. What's your take on all that?
Yeah, that's something that we have seen as well. Big investors, big builders that are coming in and buying up whole communities, or building whole rental. We call it the rental nation, because we're seeing more and more of those communities pop up in different parts of the city. I think that that's a big part in why our rental market is seeing such an influx in rentals because of that. So I think that those particular communities are definitely, just something that we're watching and seeing how they're really going to impact our industry, because this actually just really started within the last year or two. And so there's not much data on there, but we want to, definitely keeping an eye on it and seeing how that's going to continue to impact the real estate industry.
Yeah, well, it is phenomenal. And the builders, they can come in, sell a whole community. They don't. It can be quick and easy for them,
and profitable for them, because they're actually they're making a lot more money and selling them like that in bulk. And so that's one of the reasons why they're doing it.
All right, Cathy Treviño, thank you so much. We're glad you were here. Enjoyed talking with you on the Ralph Bivins project, and we're looking forward to talking to you again as 2023 rolls along. We'll see. Nobody knows, but it's a pretty interesting market we're in right now. So
exactly. Thank you so much for having me, Ralph. It was a joy to be on your show today, and I hope to do it again.